Hi guys, today I want to introduce you a company called Novo Nordisk. I purchased shares in this company back in 2020. It was a time when many stocks were on sale with a huge discount, and I bought it with a 20% discount from the fair price of the stock. So I calculated intrinsic value for this company or for this stock, and it was about $72. So I bought it here with $58, and right now I'm doing pretty good with only this stock, 72% profit. This is not my best position in my portfolio, but I really like this company, and today I want to show you guys why I purchased this stock and why I'm not buying more shares in this company, although I really like this company. But first thing first, let's start with a bigger picture. So Novo Nordisk is a healthcare company, engages in research, development, manufacture, and marketing of pharmaceutical products worldwide. For you guys, if you're not located in Denmark, and I guess many of you are not from Denmark, so for you this stock would be a foreign stock. And if you haven't seen my previous video, you can do it. In my previous video I talk about foreign stocks, how to buy them, how to buy and sell foreign stocks with ADR, GDR, and also ETFs. So long story short, this is a foreign stock, and for me to buy the stock, because I'm located in Germany, it means for me I need to buy this stock with some kind of ADR or through OTC. So I bought it as an ADR. If we check it here on this website from Fidelity for this company, Novo Nordisk. So for this company, NVO. So this is Novo Nordisk ADR. So for this company, you can buy ADR. I hope you know what ADR is. If we click here on security type, we can see depository receipt. So ADR is depository receipt. One more time, if you don't know what ADR is, please watch my latest video about ADR and GDR in ETFs. If you haven't seen it, do it. Only then you will understand why I'm talking here. So Novo Nordisk, I bought it as an ADR, which was traded on New York Stock Exchange. By the way, this stock is also included in a couple of ETFs. You can see it here. So we have two ETFs which have Novo Nordisk as a part of their portfolio. So I bought this ADR last year with this price, 58. So as I promised you guys, I show you my calculation for intrinsic value for this stock, but let's continue with big pictures for this company, why I bought it at the first place. So I did my research on this company, and first thing I checked was past performance. And if we check here, we can see that this is a slow growing company, but it's growing all the time through years. And we can also see that cash flow from this company is also very strong, also intact with revenue. So also free cash flow pretty good. It means company has enough cash on hand to spend on other things like investments and repurchase of the shares, for example. So after I checked it, I was pretty happy with the past performance of the stock. And next thing I checked was financial health, and financial health of this company is perfect. we can see it here that the company is almost not having any long debt. So they decreased their long-term debt from 1% to 0.8%. That's almost nothing, and they are able to generate enough cash flow to cover all their current operations. So it's also pretty good. That's actually very impressive. It's 10,000% cash flow. So it's bigger than their current operations. This is a very good sign for me. And also we can see that the company is having enough cash flow on hand to cover their long-term debt. So this is also very good, and company is very strong with financial health. So next thing I like about this company, that this company pays dividend. It pays not that much, but it's still better than nothing. So it's 1.5%, and their dividends are well covered with 50%. And future payout for shareholders also about 50%. So it's also good for me. And next thing I check would be management. I want to see that the current CEO is staying on this position longer than 2 years. So in this case, 5 years, it's very good. Another thing I check, a leadership team, 2 years average time is also good, and board members 3.5 years. So this shows me that a team behind this company is pretty good. They have a CEO who knows what he's doing, and CEO gets support from leadership team and also board of members. So this is also a very good sign for me. Next thing would be ownership of this company. We can see that many other big players like BlackRock, Vanguard Group, JP Morgan, Goldman Sachs, Fidelity are all invested in this company, and they also did some repurchase recently. It was in January, it was in July, so you can see those company invested money, they have interest in this company. So that would be it for a big picture of this company. From what I saw 1 year ago, I was excited, and if I see things like this, I want to see more financial data for this company. So the next thing would be to check this website. This is from morningstar.com, and I just put here NVO, and I get all the data for this company. And on this site, on this website, I want to see things like gross margin, operation margin, net margin, return on assets, return on investment capital, and sometimes also earnings per share and amount of outstanding shares. So let's start with gross margin. Like I said in previous videos, I want to see increasing gross margin. In case with this company, it's they started with 80 and right now it's 83. It's pretty good. After 10 years, they didn't decrease their number for gross margin. If we compare it, for example, with Baba or Alibaba, you can see that they started with 67 and now they have 40. So it's okay. I can live with this as well, but what I like about this company, they're pretty stable. So they're not losing their numbers here. The same goes for operation margin. You can see they started with 32 and right now it's even better. Right now it's 41. So again, if I compare, for example, with Baba, it doesn't matter with what company I compare, but you can see they started with a bigger number and right now they're at 11. So it's okay, but it's not what I'm looking in a company before I buy it. So in case with Novo Nordisk or NVO, you know already this ticket. This stands for Novo Nordisk ADR. So back to this website, this number is pretty good, it's increasing, and net margin is stable, also increasing. You can see they started with 25, right now it's 35. For you guys, if you don't know what a net margin is, I leave you all the links below to this video, or you can check this info also on this website, is wallmine.com. You can see here profit margin is basically the same as net margin. So profit margin is a measure of profitability and is calculated by finding the net profit as a percentage of the revenue. So that would be it. This number, 33%, is therefore net margin. So this is pretty big, I have to say. If we compare, for example, to Baba, the percentage for Baba is 20. It's great as well, but if we compare it with to Kroger, Kroger net margin would be only 2%. That's pretty low, but let's don't forget that we compare stocks from different industries. So Novo Nordisk is a pharma stock, and it's better to compare also this number with a number from different pharma stocks. For example, I take Regen. Regen stands for Regeneron Pharmaceuticals, and this company is also good. They are able to generate 26, 30, sometimes 20, and even 40% profit or net margin. So it's also very good. But back to our Novo Nordisk stock, I also take a look at return on assets, and in case with this stock it's 30%. 30% for return on asset is pretty big. You can see here as well, return on asset indicate how profitable a company's assets are in generated revenue. And next thing would be return on investment capital. I'm an investor and I look for opportunities. And if I invest in a stock, I want to have my return on investment capital with at least 8% profit. So in case with this stock, we have pretty big numbers, 60, 50, 60, 70. So again, if we use this side, you can see also here return on investment capital, and this is a financial ratio that measures how efficient a company is at allocating the capital under its control through profitable investments. So researching for stocks, I look for those metrics: net margin, return on assets, and return on investment capitals, but also gross margin and operation margin. So also I want to see amount of outstanding shares. So the company started here with 2 million, I guess 2,800,000 outstanding shares, and now they have less. So it means that the company did some repurchase of their stocks. To confirm this information, we can see here in financials under cash flow that the company did some heavy stock repurchase. We see it was in 2016, 2017, and also 2019, 20, and so on. So this means that company is doing stock repurchase, and this is a good thing for me because I'm an investor, and it means that the price for the stock will increase because the amount of outstanding shares is lower every year. So the stock would be more valuable. This is definitely a good thing. And I also like to see earning per share that the number is increasing through years. So in case with this stock, they started with 6 and then 7. By the way, this is Danish currency. They started with 6, 7, and then 9, 10, 13, 14, 15, 16, 18, 19. This is the best growth for earning per share I saw ever. The closest would be, for example, Facebook. Facebook also started with 0 and then went to 1, after that to 3, 5, 7, 6, 10, and right now they're at 14 US dollar for a share. So this is actually very close to Novo Nordisk. The growing is very steady. You can see they started with 6 and right now they're at 20. So this is definitely a good thing for me. And the last thing I check in financials would be here operation cash flow. Operation cash flow need to be bigger than net income. That's what I prefer to see in a stock. So in this case, we also saw it here in past performance. This yellow line is cash flow and the line below is revenue. So cash flow is always bigger than revenue. I prefer to see this in my stocks, and this is exactly the case with Novo Nordisk. So after all, I see number for operation cash flow is 54 I guess millions, I don't know, and then they have some capital expenditure, and after capital expenditure they have a free cash on hand. So this money they can save, they can invest, and they can also pay dividends. This is the case they did here. You can see also dividend paid through years. This amount 21 million, and they have 31 million. So it means from this amount, with this amount they can cover all dividends they want to pay. Also in this year they can pay everything. Also in this year they can pay all dividends. So it means also after they paid all the dividends here from this free cash flow, they still have some money, and that's why you can see here in financial health that they still have a lot of free cash on hand to invest in other things, to buy other companies, to invest in new ideas. So you guys, you got the idea. This is a good company, and you can also use this website to analyze the company. And let's see the chart for this company, and right now the current price is $100, and for me it's very expensive. Now we will talk about how I calculate intrinsic value for this company. For me, the fair price for this company to buy would be $73. Right now the current price is 100. That's too expensive. Although I really like this company, I don't want to invest it right now because it's too expensive. It is overvalued right now. So how I calculate my intrinsic value. For that I use other websites like Macro Trends, and I use revenue from this site. I use earnings per share from this side, and I use PE ratio from this side. So I also use my formula to calculate intrinsic value for this company, and I'm using earning per share as a starting point to calculate my intrinsic value for this company. For example, I have 3 different scenarios. I have a normal case, I have a best case, and I have a worst case for this stock. So my discount rate or profit the profit I would expect from this company, from this investment, would be 8%. Some investors give 10%, but I'm not going that far. I enjoy 8% profit from every company, so I give 8% profit for each company. The next thing would be PA ratio. I give here 18 for normal case and 25 for best case, and worst case would be 15. Why I took those numbers? I can show you guys why from here. So this is PA ratio in the in this area, in this interval. So I just analyzed this graphic, and I see that the lowest PA ratio was 14. And you can also take this website and you can see this information here. From this website, the lowest from all times was 12, but I think this is very low, so I took 14 or 15. So in my case, I took 15 as a starting point, as a PA ratio for my worst case scenario. I still expect 8% return, and I took 3 up to 5% growth rate for the next 5-10 years. So by the way, this is how I calculate intrinsic value for a company for the next 10 years. So I give here 3 and 5 because of this revenue. You can see that year-to-year quarterly growth, the very lowest growth was between 3 and 5%. You see it here. It was 1, sometimes 2, 3, and that's why I took this range below, in the range between 3 and 5%. So this is my worst case, and the earnings you can see here too. You also can find on this website. This is the earnings per share in this range. So we can see that the worst PE ratio was, I would say, in $2. So that's why I took here $2 with PA ratio 50 and growth rate maximum 5%. So with this, I calculated my worst case scenario, and I gave 25 probability that this case would be real in the future. So here 25%, best case scenario also 25%, and normal case I go with 15%. So this is the most real valuation for this stock. But it can also be better, but it also can be worse. So I also take probability for worst and best scenarios. So we saw this worst case. Let's start with normal case. Guys, this is very similar. We take $3 as a normal PE ratio. So right now it's $3. You can see this is the highest, by the way. So I take $3 for PE ratio, and then I take 25 as a, oh, by the way, this is best case scenario. So I take 3 for earnings per share. I take 25 PE ratio. Also from here, I can see that the highest PE ratio was about 25. I don't want to take this one because it's too overpriced. So I think this number would be good. Also here 25, here 25. So the highest PE ratio for this company for me would be 25. I don't want to go higher this number, so 25 is fine. Also 8% for profit, probability 25, and growth rate between 10 and 12%. So why 10, 12%? Because we saw before worst case scenario, and the best scenario would be, you can see it here, between 10 and 13%. So that would be the best case scenario, like here 20%, 10%, here 13%. So 10, between 10 and 12, that would be fine. That was our best case scenario with 25% probability, and our normal case scenario with 50% probability with 8% profit and terminal multiple or PE ratio 18. You can see it also here from this website. It's somewhere here. The lowest was 14, so I take 18 as the normal case. PE ratio maybe 20 would be good as well, but I don't want to go that high. By the way, here you can see the median was 22, so it would be okay if you take 20, but I want to calculate my intrinsic value with lower values, so I take 18. So the growth ratio between 6 and 10%, you saw it here. So it's somewhere here. 8% is normal case, 8% normal case, here 7, 8%, 13 is best case scenario, so 12 also best case scenario. So you got the idea, between 6 and 10%. So at the end we have this table, and I sum all values from my cases, and the end I have this number, and this would be my intrinsic value for this company. And I also like to see 10% discount for every intrinsic value. So the perfect number for me to buy this stock would be $65. So the fair price for this company would be $73. Maybe if we change this PE ratio to 20, we can see that the fair price would be $75. Now we can see the current price. The current price is somewhere here between $99 and $100, and my fair value for this company would be 75, and margin of safety would be 68, somewhere here. So I would happy to buy this stock, to buy shares of this company in this area, in this range, but unfortunately it's not the case right now. We can see the price is too expensive for me. I'm not going to buy it right now, unfortunately, although I really like this company. I might consider to buy it here somewhere between 75 and 80 maybe, but right now it's too expensive. I'm not going for it right now. So you guys got the idea how I analyze stocks, how I buy stocks, and this was just an example. In my next video I would like to introduce you another stock, Mondi. I recently bought. This Mondi is also a foreign company for you if you're not from Great Britain. So Mondi is this British company. They produce paper boxes and things like that. So in my next video I would analyze this stock, and like I said, this is also a foreign stock. This stock you can buy only as only through OTC. So if you type here Mondi, you only find here ADR, but if you click here on Go, you can see that Mondi you can only buy through OTC markets. But this is a story for my next video. If you enjoyed this video and would like to see more videos with analysis like this, give me a thumbs up and subscribe. See you next time, guys.